Okay guys, in this video I'm going to go into more detail about the indicator that I created, the market structure indicator I created for TradingView, and I'm going to show you the backtest I did. I did a 6-month automated backtest, and I'm going to show you the result. Okay, but before I go into the result, first let me show you, for those of you that are probably new to this channel, perhaps you are seeing my video for the first time. This is the indicator that I'm talking about. It is available for free on TradingView. However, it is a private script. Okay, it is not on the public library of TradingView's indicator. Okay, because they were moderating it, and the easiest way I can bypass the moderation is to publish it as a private script. Okay, so this is pretty much how the indicator was. I'm just going to do a quick overview. I made a detailed video on how it works, explaining institutional market structure, short-term highs, intermediate-term highs, and long-term highs and lows. That's pretty much what the indicator is based on. That's pretty much what it is based on, right? So the indicator shows sell whenever price takes liquidity and then closes below an intermediate term low. Okay, just like we had here. This is an intermediate term high, right? The market took liquidity below this low as well, and also below this low here, and then closed above this intermediate term high. So that's a buy. That's when it shows a buy, right? Now, that it shows a buy or that it shows a sell doesn't mean you should buy or sell. Okay, that you see this buy doesn't mean that is valid. Doesn't mean that that is a trade you should take. Okay, there are many things you still need to look at. The indicator is not a trading signal in code, even though you could use it as one, but you need to know what you are doing. All right. If you look at this, for example, look at the relative equal highs here. So does it make sense to take a short here? It doesn't. It doesn't make, I mean, to take a long here, it doesn't, it makes absolutely zero sense to take a long here. Okay, because this is relative equal highs, you don't want to long above relative equal highs. Okay, we don't trade like retail traders. They see relative equal highs as resistance, but the algo is going to see it as liquidity. Okay, so once it runs relative equal highs, there is a 75% probability that there is going to be a reversal. And this script at the moment does not filter based on whether it is relative equal high. The only thing that the indicator does is it shows sell when there is liquidity sweep above any high, above a short-term high, and then there is a close below an intermediate term low. So this sell is showing here because price took liquidity above this high here, took liquidity above this high as well, right? That is why this, and then it's closed below this intermediate term low. All right, and then this buy is showing here because it took liquidity below this small low here, this low, and just a little bit below this low as well. Then it closed above this intermediate term high. That's why the buy is showing. So it doesn't, there is no other filter other than these two things: liquidity sweep and then market structure shift above or below an intermediate term high or low. Okay, so that there is a market structure shift doesn't mean that is a valid trade you want to take. Okay, personally, I would never have taken a trade here. I would never. This is Friday's price action. This is GU. Um, I would never have taken a trade here because of this relative equal high. All right, and this doesn't even matter if there is a relative equal high. It's like, even if there is no relative equal highs here, and there is a buy here, it doesn't necessarily means that that is a valid trade. Okay, you still need to look at your trading rule. Like, you still need to look at other things you are looking at, you use as confluence for your trades. All right, I hope what I'm trying to say makes sense. So this indicator in itself is just to assist you visually to know, okay, now there is MSS, and you know that when there is MSS, liquidity had been taken. So you trust the signal more when you already have a confidence. Your confidence is, you don't even really need to have a confidence per se, but at least you should have an idea of, okay, where is price going to, where do you expect price to go to. You understand? So that's pretty much how the indicator works. However, every buy signal, every sell signal is not a valid trade. Let me put that straight to you. But it doesn't mean that the signal is not valid in quotes. Like, it doesn't mean that liquidity was not taken or the MSS has not happened, right? Okay, so um I haven't gotten that out of the way. I'm going to go through 6 month back test of this indicator. Basically, what I did is I created an EA on MT4 to automate my trade based on this signal. So the current version of the EA is simply based on these signals. Okay, it's simply based on, for example, the EA would have taken a buy here, right, and it should have been stopped up. Okay, so it is simple. There is no other filter other than, when the only filter right now on the EA. I'm going to go to 24 now and I will show you. Then I'm going to run the automated back test together. So the only filter that the EA has right now is Q zone filter and time of day Q zone, obviously. So it will only take trades between 1 a.m. and 5 a.m. New York time. Okay, so this buy, for example, the EA would not have actually taken it because I excluded Asia Q zone from the filter. So it only take trades that happen between 1 a.m. and 5 a.m. New York time, and trades that happen between 7 a.m. and 12 a.m. So after 12 a.m., it will not take any trade. So between 12 a.m. or 12 noon and the start of London open Q zone 2 a.m. But I used 1 a.m. instead of 2 a.m. because I saw that there were many valid setup that oftentimes form before 2 a.m. So I used 1 a.m. instead. Um so that's the only filter right now that I have added to the EA. And aside from that, the way the EA manages risk is a little bit different, in that when it loses a trade, or when it sees that the environment is less probable, it sees that the environment is not, um, the probability is low, it is going to use a low risk. Okay, it is going to have the risk, and it can even sometimes divide the risk by 4 depending on um, how the environment is currently. So those are the only two things, but every other signal it takes it. So assuming this signal, for example, it will take, it only takes a signal if it is not currently in a trade. All right, so let me just go to the EA so that I will just show you. I will do a quick explanation of how the EA works. Okay, so I'm back on MT4. The EA, this is the EA Paradigm Ice. Okay, so MT4 allows you to backtest or do an automated backtest of your strategy. Okay, you can convert your strategy into an EA to run a backtest. Or there are different ways you can do this. Okay, but you need to know how to code basically in MQL4 to be able to do this. Okay, so what I've done is I've created the EA, I've automated the backtest input. So what the EA basically does is that it is going to open a sell trade, it's going to open a short when there is a sell signal from the indicator. I have a similar indicator right that has been built into the EA that the EA looks at for to receive his data. Exactly what is on MT, exactly what is on TradingView, with just a little difference on the implementation. So there's just a little bit of a difference in the implementation, but it's pretty much exactly the same thing. So all the signals that TradingView is showing, all those sell buy signal, that is what the EA is using. So the EA is going to open a short when there is a sell signal, and it is going to close the short when there is a buy signal and open a buy signal. All right, and when there is another sell signal, it is going to close the buy trade and then open another sell signal. I mean another sell trade rather. Am I confusing signal and all right? So I hope what I've just explained is clear. So it's pretty simple. When there is a buy signal from the indicator, that is when there is a liquidity sweep and close below an intermediate term low, the EA is going to open a short trade and it will only close the short trade when there is an opposing signal. So when there is an opposing signal, it will close the existing trade and then it will now open a new trade. Okay, if it's a buy signal, it's open a buy signal. If it's a sell signal, it's open a sell signal. So what this means is that the EA would not always get stopped out. Okay, even if it is a losing trade, like it will always wait for the full risk to be taken. Okay, for example, if we use 1% and there is a let's say the EA takes a short and it uses 1% of the risk and there is an opposing buy, there's a buy signal, right? And let's say the buy signal happened like inside of the stop loss zone. Okay, the stop loss has not been taken, but there is a buy signal. It is going to close it. It's not going to wait for the stop loss to be taken. All right, so I hope that is clear. So I'm going to run it from um I'm using 8 cap. Okay, so what you should also understand is that the results you are going to get when you backtest this is going to be different across different broker because the data feeds are different. So there is different highs and different lows. They don't always have the same price point. And you can go to TradingView and compare the highs and the lows of different brokers. You would see that they are different. And so obviously because the highs and the lows are different, there will be situations where price will form a short term low or an intermediate term low on one broker and on the other broker is not the same case. It's not the case. Okay. So that's why I'm stating that I'm using 8 cap and I'm using 8 cap specifically because most prop firms are also they are using 8 cap. Okay, and if I'm going to be trading this on a proper account, then it makes more sense to do the back test on a broker that is popular with most prop firms. All right. So having said that, I'm going to configure the EA now and I'm going to run it through. I'm going to run it through each month. Okay, so I'm going to run it through. Let's start from November. Okay, November. I only have data from November up onto the current price action. They only provided 6 months of data basically. So what I'm going to do is I would first run the EA on each month. Okay, so I'll run it for the month of November, for the month of December, for the month of January, February, March, and then the current month of April. Okay, and I'm going to let's do something. I'm going to disable the I'm going to run two different tests. One test is going to have the Q zone filter. Okay, the other test would not have the Q zone filter. Then we can compare the two, and then after that, I'm also going to run it through the whole 6 months. Okay, without any break in between. So the whole 6 month um to see how it would have performed over the course of an entire 6 months if it was running continuously, okay, and not on a monthly basis. Okay, I hope that is clear. So I will explain how the EA works. So let's get it running. So let me set up the EA. This is expert properties. The MSS type is intermediate term, right? That is, MSS is only confirmed when there is a close or below or above an intermediate term high or low. All right, and this RR doesn't really matter because I've set the take profit to be dynamic. Okay, so it's not using an RR. Okay, so it only closes it when there is an opposing signal. Okay? It closes the trade when there is an opposing signal. All right, so that is what this dynamic means. And time based TP I've not coded this yet, so this does not have any effect. And risk, I'm going to set the risk to 1%. Mitigate drawdown, I'm going to set it to true. Mitigate drawdown is an algorithm I built into the EA to control the risk. Okay, so it is not always using 1%. So sometimes it will use 1%, sometimes it will use 0.5%, some other time it will use 0.25%, depending on two things: the losing streak and the kind of price action that we are having. Okay, if it's consolidating, it is going to try to reduce the risk. Okay, so I'm going to set this to true as well. And where is the Q zone filter? Everything else doesn't really have any effect. I haven't worked on it yet. Then trade only during the Q zone. I'm going to set it to false first. Okay, I'm going to set it to false, and then we are going to check the result. So for the month of November, so I've set the initial parameters of the EA. Every other thing is not important for the sake of this backtest. All right, so let me set the date to 2022 November 1st, and then I'm going to run it from that date to 2022 November, sorry, December 1st. Okay, so we're going to run it from 1st of November to 1st of December. Okay, so once I click on the start, the strategy tester would begin to iterate through each of the candles like as though it is in a live environment, and then we have a spread. It will simulate spread. I've set this to 2, and it is running on the 5-minute time frame. Okay, so I'm going to click on the start, and then it should start running. So let me increase the speed. So basically you can see it opened a trade there because I've set the Q zone filter to false. Okay, so that's why it took that trade there. So it has taken close the trade right there, and it has opened a short right there as well. Now it has closed the short and it has opened a long, and the stop loss is this red stuff here. So here we had a sell, it has closed it. So I'm showing you this just so you know that what the strategy tester is actually doing. So basically to just try to iterate through all of the candles based on historical price action. So I'm going to fast forward it to just make it faster. So we have, so let me go to the result. So these are all the trades that we're taking, and here this is the graph for the month of November. Okay, this is the equity curve rather for the month of November. So it's profitable for November. Let's go to the report. So this is a 4.5% return at the end of the month, even though it went up to, it did 11% before it then started to drop. So if assuming we set a profit target, let's say we set a profit target of 10%, it would have achieved that profit target. Okay, so I like to pay attention to the highest equity versus the eventual balance. Okay, and if you go to the reports, this is the initial use 10,000, so this is 4.5%. Obviously, that is the net return, right? And the absolute drawdown is 2.2%. That is, it went 2.2% below the initial balance right there, right here. Okay, and you can look at other parameters like, but pay attention to the win rate. Okay, look at the profit rate percentage of total. It's only 32 percent. Okay, that's only 32% of all the trades were profitable. Only 32%. And yet it is still up for the month. It still made a profit of 4.5%. This is without any other filter. There is no other filter. It doesn't take into consideration higher time frame information. It doesn't take into consideration equal highs or equal lows. It doesn't take into consideration anything else. Okay, other than is there a buy signal, is there a sell signal, it buys and sell, nothing else. It doesn't do add bias or is there fair value gaps or anything like that. I've not built that into the EA yet. Okay, it's something I'm going to explore later on. But the current version just simply takes buy when there is a buy, sell when there is a sell, nothing else. It doesn't factor in anything else. So this is the result for that. Now, the only filter that I mentioned that I've built in is the Q zone filter. So I'm going to run this again. I'm going to run the set the Q zone filter to true, and let's run it again. Before I run it again, pay attention to the profit, pay attention to the absolute drawdown. That is the drawdown, um, how far price dropped, I mean how far the balance dropped. Um, Here, okay, so and then the maximum drawdown. So pay attention, the maximum drawdown is based on equity, okay, the highest equity minus the lowest equity. Okay, so the highest value in the equity, subtract, find the difference between the highest value in the equity and the lowest value of the equity. Okay, so both of them are important. Okay, but pay attention to this, pay attention to this, pay attention to the profit as well, and pay attention to this. You can pay attention to every parameter here, but what is most important here is the total net profit, the absolute drawdown and the maximal drawdown. Okay, the consecutive losses and the percentage of profitable trade, 32%, um is also important. Okay, so let me run it again, this time around with the Q zone filter, and let's compare the difference. Still the same data, the only difference is that it will now only take trades during the Q zone. So let's check that out. So look at the graph this time around. I mean, look at the equity curve this time around. See how smooth the equity curve is. All right. See how smooth it is compared to the previous one. The previous one, there was a lot of drawdown, and then yeah, there's still little bit of drawdowns here as well, but we can see that overall it's mostly pointing to the upside. So let's go to the report. You can see the net return here now is 16.9%, just by eliminating compared to 4% from the previous result. Okay, I hope you understand how I got my 16%, because this is $10,000, right? And 1,691 is 16.9% of 10,000. Okay, so that's the net profit. And the absolute drawdown has reduced to 0.17. Okay, so price only went $0.17 below the initial balance. Okay, and the um percentage of profitable trades has increased to 36% from 31%. Also, look at the maximal drawdown has reduced from about, was it 10%? I can't recall again, to about 7.86%. I can't recall the specific value. So you can see that the Q zone matters a lot. It matters. You can see the results. You can see the graph here compared to the previous graph. All right, this is for the month of November. Now let's run it through December. So I'm going to set this to first, and I'll set this to 1st of January. So let me disable the Q zone filter. I'll set this to false so it will take trades whenever, okay, doesn't consider the Q zone. So let's run it again for December and let's see what the result is going to be. No trades was taken. Oh, okay, I think I added a filter for it not to trade in December. Let me see. Where is the trade period? Trade in January. True. Trade. Oh, this is it. So I'm going to say change this to true back so that it will be able to trade in December. Okay. By default, if I'm going to run the EA on my live account or on a funded account, generally I didn't want to trade in December because December is consolidation month and the um it doesn't perform well in consolidation as you are going to see here. So I've enabled the ability to trade in December. Okay, so I'm going to run the result. I think I've run it already, have I? Oh, okay. So I'm going to run it again now so that you see the result. Okay, so these are the trades and look at the equity curve pointing downward. This is the December, this is the consolidation effect. Okay, so let's go to the actual report. So we have a 4.47% drawdown. It's not that bad, but it's still not great. Okay, and we have an absolute drawdown of 4.6. Okay, absolute drawdown of 4.6. Um, net profit or let's say loss of 4.4%. Um, percentage of profitable trade is about 29%. Percentage of profitable trade is about 29%. So you can see December results is really bad, really, really bad. We had a loss of 4.4% in December without the Q zone filter. Now let's add the Q zone filter. Let's see if there is going to be any difference. So I'm going to go to here. I'm going to set this to only trade during the Q zone. True. So let's run it again. And the graph is still pretty much the same thing. The critical, not that much of a difference. Let's go to the report. But our net profit or our loss now has reduced from 4.4% to 3.4%. So we have saved 4%. It's not that significant, but it's still something, especially considering if you are going to be trading on a profit. And the most of them, their maximal the absolute drawdown is 10%. So at least if it is 3.4% drawdown for a month, it's still not that bad, especially considering it is December. Okay, so and then let's look at the maximal drawdown is 3.79. So the result is better again for December if we only take trades during the Q zone. Now, the Q zone the time I use for the Q zone is between 1 a.m. and 5 a.m. New York time and between 7 a.m. and 12 a.m. New York time. So outside of those time window, it will not trade. Okay, so December is not good. I think I should find a way of writing the results somewhere to just track it. Let me pull up my Excel and I'm going to create a column. I'm trying to load up my Excel. Okay, so I'm going to create um the different month: November, December, January, February, March, and then April. And we are going to compare the values without Q zone filter and with Q zone filter. Okay, great. So November we had 4.4% profit, and with Q zone filter we had, what was the result for November again? I can't recall. I'm bad at remembering things, but let me just quickly run it again. Okay, so let me just take a minute to quickly run through November results again with the Q zone filter. All right, let's go. So with the Q zone filter, we had 16.9% return. So we have 16.9% with the Q zone filter. I'm not going to add the drawdowns, but the drawdowns are also that an additional benefit as well. But I'm not going to add that. Should I add it? No, don't let me add it just to save time. So December was initially around 4.4 as well, and then this one was around 3.4. I don't know if these values are exactly accurate, but I know it's around this amount. Okay, or should I just to be accurate, should I run it again? Okay, so let me run it again first and first. All right, so we are three. I know it's 3.4. Yeah, I know it's 3.4 and I know this one is 4.4. So no need to run it again. So let's go to January as well. Um, so let's go back to MT4. All right. So let's run through January. So we've seen November result and we've seen December result. Now this is without pyramiding, right? No pyramid trades were taken. Okay, this is without pyramiding. So I'm going to set this to 2023 January 1st, and this I'll set this to 1st of February. So from 1st of January to 1st of February, let's see the result first without the Q zone filter. I'll set this to first and I'm going to run it. So here we have the graph, also a drawdown in January, 8.5% drawdown. So let me just write that on Excel. So 8.5% without the Q zone filter, 8.5% drawdown. I should use a negative, and here I should use a negative as well. Here I should use a negative as well, because that was a loss. Okay, so I'm gonna run January again without the I'm gonna run January again without the um Q zone filter. Um okay, so let's I'm going to change this to true so that it will only take trade during the Q zone, and I will run it again. And let's go to the graph. The equity curve is still pretty much the same, but let's go to the report. But now our loss has been reduced to 4.2%. Okay, look at the absolute drawdown as well, 4.3, 4.2. So let's go and record that on Excel. Okay, so we have been able to reduce it to 4.2, loss of 4.2. So you can see that from the results so far, January is bad, December is bad. Okay, so and that's not surprising because those 2 months are basically consolidation months. Okay, if you go to if you go to the higher time frame on TradingView or on any platform you use, and you look at January and December, you see that the market is mostly confined to a range. Okay, the market is basically ranging, and during a consolidation environment, it generally would not perform. During seek and destroy or range expansion, it generally would not do very well. That's the first thing I realized about this strategy. Okay, if I ICT strategy generally, okay, any strategy that is based on market structure shifts will not do well in a consolidation environment. Okay, but when the market is trending, mostly moving in one direction, that's when we tend to perform better. All right, so let me go back to HCAP MT4. Let's run it for November. I said November, sorry, for February. So I'll change this to March 1st, and I'm going to run it first without the kill zone filter. I'll set that to false, and then let's run it. So these are the trades. This is equity curve for February. Okay, so we had this run up and then sideways, sideways, and then this run up. So let's go to the report. The net profit is 18.9. However, if we check the equity curve, we see that it actually did 28% before it then started to drop. But we are only going to record 18.9%. So we won't record 28%. That is without the kill zone filter, I believe. Just to be sure. I think yes, so without the kill zone filter. So let me record that on 18.9% profit. So 18.9% profit without Q zone filter. So let's run it with the Q zone filter. So I'm going to change the expert properties to restrict trade. During the Q zone, I'll set that to true, and then I would run it again. And let's go to the equity curve. Look at the equity curve this time around. See how the equity curve is smoother compared to the previous one. Okay, you can see that overall we are in profit. Okay, we didn't give too much back to the market compared to the other equity curve. So let's go to the report. This is 31% return for the month of February. That's interesting. And the absolute drawdown is only 0.75%. Only 0.75%. And look at the win rate. The win rate is still low, 37.7%. And yet we are up in profit of 31%. So personally, I don't really like the although shorts were more profitable for 3%. You can see if that even with a low win rate, if you maximize, let me check the results trades, let me check the maximum the maximum um the largest winning trade. Look at the largest winning trade, about 11%. That's 11R with 1% risk. And the largest losing trade is only $128, $128.7. All right, so this is really nice. I love this. Okay, so 31.58%. So I'm going to go ahead and record that on the Excel. 31.58. So let's run for March. So I'm going to set this to first of March, and I'm going to set this to 1st of April. Alright, so we're going to run it first without the Q zone filter. I'll set that to false, and then let's run it. And this is the trade taking, this is the equity curve. So this is likely, let's see the report. This is not good. I don't like this. It went as high as, so basically 6% before it then started to drop. The net profit is 1.78%. Okay, negative 1.78%. So that's a loss. So March was a loss without the Q zone filter. And with we don't have the Q, look at the absolute drawdown, 2.6%, and the maximal drawdown is 9.58%. Okay, so let me record that quickly on the sheet. Okay, what was it again? 1 point something, 1.78, I think. So that would be a negative 1.78%. And with the Q zone filter, so let's go back and check with the Q zone filter. So with the Q zone filter, I'm going to set this to true, and I will run it again, and let's see the equity curve. Look at the equity curve now. We are now in profit. Let's go to the report. We are now in profit of 14% just by only trading during the Q zone. So you can see how important the Q zone is. Okay, so 14.25%. Look at the absolute drawdown. 4 point absolute drawdown is even 0.04%. 0.04% absolute drawdown. Look at the maximal drawdown. This will only reduce by like 1%. So let me recall that 14.25%, 14.25, and April, which is the last month. So I'm going to change this to 1st of April, that's 1st of this month, till May. Obviously this month has not ended, but let's see what it would have made for this month so far, right? So I'm going to change this back. Let's run it without the Q zone filter, and then let's run it. So I trade, this is equity curve for this month so far, and the net profit is 15.2%, and the um, absolute drawdown is only 0.5%. Maximal drawdown is 8.19%. Maximal drawdown is based on equity, right? So just bear in mind. So like this drop here, that's probably like a 9% drop, right? So it's basically the highest equity and the lowest truth. So let me record that. This is 15.23%, 15.23% return so far in April. And if we include the Q zone filter, so let me run it again. And change this first to include the Q zone. Only trade during the Q zone. Okay, so trades will only be taken during the Q zone, everything else remains the same. So let's run it, and look at the equity. See how smooth the equity curve is when we enable the Q zone filter. Let's go to the report. 17%. So this is now much better, and the absolute drawdown has reduced by just $5. So the absolute drawdown is 0.4%. 0.4, yeah, this should be 0.4, yeah, that's 0.4%, and the maximum drawdown has reduced by like almost 3%. So 17.3 or 17.4%. So let me record that. Let me increase the size so that it's bigger, and then we can compare it. So we've done 6 months back test of basically MSN of market structure shift after liquidity sweep and based on intermediate term high. Okay, so we're not using short term high as our market structure shift. It will be interesting to see what it would have looked like without with short term high if we use short term high as a basis of our as a basis of market structure shift. I will run that later, but the initial test I did when I started working on the indicator wasn't good, so I didn't really bother to factor that in into this EA. Oh, I think I included it. Let me see. Um, I think I did. Yeah, I did. This is it. So it's based on intermediate term high. If you run it on short term high, let's see. I didn't get a good result back when I was running it through trading view strategy scripts. Let's see. So this is for April. You can see, look at the results. Look at drawdown of 1.4%. Still not that, but you can see that short term highs most of the time, right? Short term highs most of the time will be used as liquidity. So me, I already know this from my initial back test on TradingView when I was running it through TradingView strategy script. Okay, so that's why I'm setting this to intermediate term high. So let's run it again. Just to be sure. Yeah, you can see the difference. So that's that for this video. I just wanted to show you guys the sorry. So just wanted to show you guys the importance of the Q zone, okay, and also to let you realize that the indicator, if you manage your risk well, is profitable in code. Okay, but I don't really want you to see the indicator as a strategy in itself. It's just to aid and assist you in being able to easily visualize what is going on the chart. Okay, the sell and buy signal only shows when liquidity has been taken and then there is a shift in market structure based on candle close. Okay, based on candle close above or below an intermediate term high. All right. If you don't know what intermediate term high is, or long term highs or short term highs, I made a really detailed videos a few weeks back. You can check my Telegram channel. You can it should provide you enough information and you should be able to relate after. All right. So you can see the difference in the result just by disabling the Q zone filter. Okay, so November was profitable, 16.9% return in November. December had a negative drawdown of 3.4%. January had a negative drawdown of 4.2%, and February had a win of 31% return. March 14.2% return. April 17% return. All right. Um So that's the result of the back test. You can see for yourself that if risk is well managed, you can still make at least 5 to 10% as a human being. Okay, this is an EA that runs 24/7. So obviously it will not miss any trade and it is going to, there is no emotion. So it's not going to um use a high leverage, or it's not going to like shoot the risk up. Is not going to be scared not to take a trade. So a human may not be able to accomplish this if you are doing this manually, okay? But an can easily do this because there is no emotion, there is no It's not, it takes every trade, it doesn't miss any trade. Okay, basically as long as there is internet connection and there is no let's say your laptop does not go off. Okay, so basically for the EA to keep running 24/7, it has to be connected to the internet, your laptop has to be on, your MT4 has to be on. Okay, so and the EA is not even done. This is just the first usable version in code of the EA. Personally, I can't use it to trade yet because I don't think 6 months of data is enough um to validate if the EA is actually profitable. Okay, I can't depend on just 6 months of data. Okay, we don't know what has happened between, for example, last year January and that November. Okay, it could have not been profitable for the whole of those months. We can't really say for sure. Okay, and last year, years ago, so I need to run it through at least 10 years of data. Getting data has been really difficult. I was hoping that I'll be able to get it on MT4, but 8 cap only provides 6 months of data. Alright, so if I try to run it through October, for example, it will not run because there is no data available for that period of time. Okay, so I'm still looking for how I can source for data, and obviously the broker you use matters as well. Okay, the broker matters a lot. Okay, if I run this same test through another broker, the result is most likely going to be slightly different. Okay, I don't think it is going to be significantly different, but it is going to be, at least you won't get exactly the same result most likely. Okay, so that's pretty much it. So if I'm going to be using the indicator, let me go back to trading view. So if I'm going to be using this indicator, it's free, it's available on trading view. I'm going to include a link to the indicator on in the comment section of this video. Okay, just bear in mind that the signals that form outside of the Q zone are not valid. Okay, and the reason is because the algo that delivers price oftentimes during the outside of the Q zone period, between during the launch hour, those are the periods when the main algo and some of the subordinate algo used to undergo maintenance. So the and it's not all the time. Okay, so there are times when you see pure price action, pure price feed um within outside of the Q zone. Okay, but oftentimes whenever they want to feed the algo with new data, like when there is an economic release, or when there is new data, when there is all this, FOMC result, interest rate result, because those are the data that they feed into the algo ice label that delivers price. Okay, so the times that they used to do the maintenance is usually outside of the kill zone period during the launch hour between 12 noon and 1 p.m. or 1:30 thereabout, New York time launch hour, and both New York launch hour and London launch hour. Okay, so between 5 and 6 or 6:30 a.m. New York time, that time window is the launch hour. So any signal you see during that time window is not going to be valid. Okay, you can see this one. Okay, this is not the launch hour though, this is Asia Q zone, but we know that Asia Q zone is mostly consolidation. That is why I excluded it from the Q zone filter. Okay, but here we didn't really see one that is not valid like that. Okay, this one, this is 9, this is, so this one would not have been valid. Okay, so this is what I'm saying about seek and destroy. Okay, you don't want to trade it. Once you start seeing this kind of price action where price is just, you know taking buy side, taking sell side, this is seek and destroy. You don't want to trade in this kind of environment. The initial one was quite okay, right? This is initial consolidate, market maker buy model, market maker sell model. So personally, I would not even have taken a long here because this is a market maker sell profile, initial consolidation, run to resistance, smart money reversal, and the offset. So this is, I would not have taken this if I was trading manually. All right, and if you look at this as well, this move from here to here, that is also a buy model. Initial consolidation here before this fair value gap. Remember, if you've seen my video on market maker buy and sell model, you would easily spot, particularly this one, this move from here to here. You would easily spot this as a market maker buy model, because if I wanted to trade this manually, I would be anticipating that price should come into this fair value gap. Okay, immediately after this shift, I'll be waiting for price to return into this fair value gap for me to go short. Okay, and when the market doesn't do that and it comes close to it and then begins to consolidate and then all of a sudden moves away, that is oftentimes the beginning of the market maker buy model. Okay, you can check my um YouTube videos. I dropped it a few months back. Was it this year? I think it was this year, but a couple of months back. You can check it out um, to have a better understanding of the market maker buy and sell model. So what I'm saying in essence is the summary of this video is, one, you can see that this strategy or this concept is profitable over 6 months of data, but it is not profitable during consolidation environment. And the good thing is that we know we can anticipate certain months when the market is likely going to consolidate. For example, November, for example, December and January. Okay, and also the within the time of day, we know the Q zones. Oftentimes, the um the price feeds are not accurate price feeds. Okay, um and the market tends to also consolidate during that period as well. And we also excluded Asia Q zone because Asia also consolidates oftentimes on, particularly on EU and GU. All right, and I think that's pretty much it. So if you're going to be using the indicator, just make sure you only take signals that aligns with your bias, okay? And you only take signals that forms during the Q zone. And once you see that the market is in a seek and destroy environment, it's just best to sit it out and wait until there is a better price action. Okay, so that's pretty much it. If you have questions, feel free to drop it in the comment section, or you can also ask on the Telegram channel. I'll see you guys in the next video.